Let's quickly talk about SA 320, which talks about materiality in planning and performing an audit. An item or information which will influence the decision making of the users is nothing but materiality. So material item. So materiality is a matter of professional judgment and auditor's perception. So materiality is a matter of professional judgment and auditor's perception. See, materiality for both overall financial information level and individual account balance level will be considered. So materiality is both qualitative and quantitative. Then there's something called performance materiality. What is performance materiality? This is an amount set by the auditor, so which is below the materiality to reduce the risk to an appropriately low level, so that the probability that aggregate of uncorrected and undetected misstatement could exceed materiality. Then performance materiality is for some items individually may not be material, but aggregate it is material. That's why we consider performance materiality. Aggregate of individually immaterial misstatement may exceed materiality. That means so individually it may be immaterial, but when you consider aggregate, it is actually material. And there is an inverse relationship between materiality and audit risk. Then for determination of materiality, auditor uses the concept of benchmarking. So what is this benchmarking? We'll see that. So a percentage is often applied to a benchmark to get the materiality. So we have to select appropriate benchmark from financial information. Then factors to be considered in identification of benchmark. Venus. This is given by Aarti Lahoti ma'am. I have followed the same thing. So factors to be considered in identification of benchmark is Venus. What are the factors? Volatility of the benchmark, elements of financial statements, then nature of the entity, then users, needs of the users, then structure. Then this is the financial structure. So what are the factors again? Volatility, elements, nature, users, then structure. Then revision of materiality as the audit progresses. Materiality can be revised once the audit is progressing. So if there is any change in circumstances, if there is any change in the auditor's understanding of the entity, then if there is any new information or additional information, then if the materiality is set lower at the initial levels, and then it can be changed once the audit progresses. So revision is possible.